A mixed close on Wall Street. The Dow Jones and the S&P 500 break a 4-day winning streak after hitting record highs in the session. The Nasdaq closes with minor gains. Stocks across the Asia-Pacific trade largely higher despite a mixed handover from Wall Street. The gift nifty also suggesting a higher start for the Indian market. Crude prices slip over 2%. Brent trades around $73 a barrel as supply disruptions from Libya ease and demand concerns linger despite China's stimulus plans. Gold prices consolidate after hitting record highs. And Israel's military chief says it is preparing for a ground offensive in Lebanon, even as both Hezbollah and Israel continue to exchange strikes. France also pushes for 21-day ceasefire as the UN Secretary General says all hell's breaking loose in Lebanon. Torrential rains lash Mumbai with waterlogging seen across regions of the city. The IMD issues an orange alert for Mumbai, Thane and adjoining regions. Schools and colleges will also remain shut in the city today. Good morning, and you're watching Power Breakfast on CNBC-TV18 in the Mumbai News Center. I'm Vinny Motiwala. Thanks so much for tuning in. And a quick look at how the Asian markets have performed. Though the handover from the US was not that exciting, Asian markets today seem to have opened up on a bit of a positive side. Hang Seng holding on to gains of almost 0.6%. The Taiwan index holding on to gains of almost 0.4%. Looking at the Nikkei, that's Japanese market, that's also managed to see strong gains this morning. Chinese market too managing to hold on to some bit of a gain, and Australian index holding on to gains of almost 0.5%. Let's look at the gift nifty implied open. What does that indicating as well? So as of now, the nifty implied open 50 points uptick is what we're watching out for, even from the Indian markets. So yes, not a bad look, at least coming in from the Asian markets as a handover that we're watching out for. But in the US market, Wall Street that we saw ended lower, and that was retracting from its week's rally. Dow Jones also fell almost 300 points, snapping its 4-day winning streak. Looking at the S&P 500, that also dipped by 11 points, retreating from those record high levels, while the tech-heavy Nasdaq that eked out minor gains of 8 points. CNBC's Bertha Combe is joining in with us to give us a wrap on what happened in the US markets.
U.S. markets were mixed across the major indexes Wednesday. Wall Street couldn't extend Tuesday's rally when the Dow and S&P both hit fresh record highs. They did so again this morning, but the Dow ended the day down 293 points. The S&P 500 was down 11, while the tech-heavy Nasdaq gained 8 points. A steady decline in mortgage rates is kickstarting home refinancing. Applications to refinance surged 20% last week, according to the Mortgage Bankers Association, with demand up 175% over the same week a year ago. But according to the Mortgage Bankers Association, the level of refinancing activity is still well below what we have seen as a norm in past cycles. The rate on a 30-year fixed mortgage declined for the 8th straight week, though, and it is now at 6.13%. Meantime, Southwest Airlines announced that it is reducing service to and from Atlanta next year and cutting more than 300 pilot and flight attendant positions. The announcement coming just before the airline's Investor Day, when management will outline the company's plans to cut costs and grow revenue, as it faces a major proxy battle from activist investor Elliott Management. That's what's happening here in the U.S. Back over to you in Mumbai.
Thanks so much for that. But let's move on. And the chief investment strategist at Oppenheimer Asset Management, John Stolfast, calls the recent rate cuts by the Federal Reserve as a down payment for the Wall Street. While Goldman Sachs Asset Management's Lindsay said that and commented that the Fed continues to keep its focus on the inflation target. Listen in.
We had 11 rate hikes. We had 9 pauses. 20 FOMC meetings in a Fed funds hike cycle. And this is a down payment. We see it by the Fed for Wall Street and for Main Street. And by down payment, sort of a good faith deposit on the thought that indeed the Fed is getting ready to cut rates further as needed and if needed. And I think the market has reflected that over the course of the last week since the announcement of the rate cut.
It doesn't mean, I think a lot of people are saying the inflation proverbial beast has been slayed. I think that's a bit of an exaggeration. Inflation is absolutely something that you have to keep your eye on, and the Fed has not stopped watching it. What's happened is the concern about the labor market has ticked up. And that softness we are certainly seeing in data. It'll be interesting in the numbers that we get later on this week. Inflation is something they need to watch, but it really is the job market that concerns them at this point in time that could lead to potentially a recession, which again is in our base case.
Let's talk about tech stocks, right? Tech stocks continue to remain in focus on the backdrop of the gaining AI trend. Professor of Finance at NYU Stern School of Business, Ashwath Damodaran, comments on the tech story in the US with earnings just a week away.
In the last few months, we've had reminders with companies about their weakest links. With NVIDIA, it was around the earnings announcement, which is you saw how high expectations have been set, and what looked like a good earnings report turned out to be a disappointment. With Apple, we've lived from upgrade to upgrade now, 16 upgrades, and I don't know why we're surprised. One upgrade measures up to expectation, the next one doesn't. With Google, we're still waiting for the next big business. They still make so much of their money from the search box. So much as these companies have been winners, they also have weak spots. And I think in the last few months, you see those weak spots sometimes highlighted, which explains why on any given day, 2 of them are up and 2 of them are down.
Okay, that was how we had the global markets perform. But how did our Indian markets actually prep, given that the cues that we have from the global market? We have a research team joining in with us to tell us how we should be setting up for the trade. Vivek, first up, let's come to you and see what the trade setup is looking like for the Indian markets today.
Well, good morning. Absolutely nothing to complain about. Yesterday we closed about 26,000. Today, we are looking at the Asian markets as well as the GIFT Nifty indicating a positive start. Let's have a look at quickly how overnight cues panned out. Overnight cues largely mixed. US market snapped a 4-day winning streak. Oil prices yesterday very supportive. They cracked almost 2%. And when you're talking about Brent futures, yesterday closed near the $73.50 a barrel mark. Now, talking about the Indian markets, like we mentioned, it was actually a very choppy and lackluster session until the last hour when you actually saw quite a bit of buying emerge, and that helped the Nifty close above the 26,000 mark. Mid-cap index snapped a 3-day gaining streak, but Nifty Bank managed to hold on to the 24,000 mark. Mid-cap index and the small-cap index relative underperformance actually ensured that the market breadth was in favor of the declines. What did very well yesterday? It was power as well as power ancillary stocks that did quite well. This is on the back of the National Electricity Plan, the 10-year plan that was being approved by the Ministry of Power. But on the other hand, another power exchange stock actually continued to see weakness for the second day in a row as the overhang of market coupling refuses to go away. Today, quite a few cues, but most importantly, we'll be waiting to watch out for whether the gap up start that we are anticipating sustains or whether we do see selling emerge at the higher levels.
Thanks so much for that, Vivek. That's how we should be watching out in terms of a setup for the market. But which are the important stocks that we are keeping on our radar today? Vamakshi is joining in with us. Vamakshi, good morning.
Well, good morning, Vinny. Let me first start off with IDFC. This counter will be in focus because the NCLT has approved the merger of IDFC Financial Holdings with IDFC Limited, leading to the merger of this combined entity into IDFC First Bank. So watch out for all of these counters. Vedanta will be considering the 4th interim dividend for FY25 on October 8th. PP Fintech will also be on our radar, and that is because sources suggest that PP Fintech may explore plans to enter the healthcare space and start its own chain of hospitals. Now, the company has clarified. They say that the company continues to explore options but have no decisions to update at the moment, so watch out for that one as well. Zen Technologies has launched a remote-controlled weapon and surveillance systems to strengthen India's defense capabilities, and ONGC is also on our radar because the board has approved the Government of India's decision to infuse an additional 10,501 crores in ONGC Petro Additions Limited. Five-Star Finance again in focus on the back of a source-based news. PE investors are looking to offload nearly 19.22% stake in the company, so it's a huge chunk that they're looking to offload at a floor price of 768 rupees per share, putting the deal size at almost 4,324 crores. ASK Automotive also on our radar because Kuldeep Singh Rathi, who is one of the promoters of the company, is looking to sell 6.05% stake via OFS on September 27th, that is today, that is on on Friday as well as on Saturday. Floor price is at 433 rupees per share. The base of OFS size is at 5.5% of equity for pegging it at 469 crores. They also have a green shoe size of almost 0.55% of equity. And lastly, let's watch out for KPR Mill. The promoter KP Ramaswamy sold 3.1% equity or 971.4 crores worth of shares, while on the other hand, SBI MF was a major buyer of this chunk.
Thanks so much for that, Vamakshi. But let's move on and talk about what's going to happen in the world of F&O. Nigel is joining with us this morning. Nigel?
Well, good morning, Vinny. Yesterday's trading session, we had a late surge, actually. The Nifty Bank came to the party, and that's what helped the Nifty recover sharply from the low point of the day. It was a technical factor as well that did play out for the Nifty Bank, because yesterday you had the options weekly expiry, and also you had the monthly expiry that played out for the Nifty Bank. And I was looking at the data points, and it appears the rolls are on a lower side if you compare it to this series with the previous series, and the total open interest as well on the Nifty Bank is relatively lower. So that's the reason, in fact, we did bounce up. The Nifty Bank came to the party. How are the FIs placed? Well, yesterday there was obviously some unwinding since the rolls were not too high on the Nifty Bank. The long-short ratio comes up for you with the longs at around 75%, while the shorts are at around 25% or thereabouts. And as we've been making this point of the last few sessions, that the clients and the FIs, well, they're on opposite ends of the spectrum. Clients, net short with close to 2.5 lakh contracts on the short side, while the FIs, they're net long with more than 3 lakh contracts on the long side. The India VIX, well, it perked up a little bit, but in the last couple of trading sessions, it's cooled off yet again. And that's normally a bullish sign. So that's good news, right? The India VIX cooled off by close to around 7% in yesterday's trade. Now, today you have the Nifty that plays out its weekly and monthly expiry. It's the contract that expires today, the September contract. And the sense you get is there is some signs of writing. The 26,050 call, well, that's been seeing some writing. The 26,100 call as well has been seeing some build-up over the last few sessions. But on the downside as well, there appears there is some support at around this, 25,800 level, because the 25,900 put has seen a fair bit of open interest build-up. So that's the broad range today, that comes up for you on the screen. We need to get past the 26,100 level for the bulls to feel good and the shorts to get squeezed out on the wrong side. So let's see how that goes. The Nifty Bank, that's been the flag bearer for the bulls. That's been the one that's been recovering from the low point of the day. And the recent high, you'll want to get past that and trade above that level. So that's the 54,250 odd mark. Let's see whether or not we can get past that. Reference point on the downside is 53,700 going by the options data and going by yesterday's low. Back to you.
Thank you so much for that, Nigel. But let's move on to a CNBC-TV18 exclusive. Manish Chakhani of Inam Holdings believes that the valuations in the small and mid-cap have gone berserk and that investors must avoid having too much of their investments in small caps. He also said that investors must not fall prey to the FOMO feeling. Listen in to what more he had to say.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax. I would be very, very cautious in those kinds of places. And typically, these are not high return areas. The leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank, HDFC, even and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years.
Okay, on that note, we're going to slip into a very short break, but don't go anywhere. We will be coming after the break and talking about the rains in Mumbai. Welcome back. You're watching Power Breakfast on CNBC-TV18. Mumbai rains that surely lashed out yesterday in Mumbai and in the suburban areas of Mumbai, causing significant flooding in low-lying areas and halting local train services. The India's meteorological department has actually also issued an orange alert for the city and neighboring regions for today as well. Santhya is joining in with us to give us more details on that. Santhya, what are we expecting today in terms of rains? Should we expect a downpour as well?
See, right now I am in Mumbai's Dadar area, and this is the Dadar local station. And for now, you can see the train movement is smooth, but this was not the situation last night. Heavy rainfall once again wreaked havoc on Mumbai and nearby regions last night. It was a combination of a low pressure area over the Bay of Bengal, an associated cyclonic circulation and a trough which led to the heavy rainfall which brought the city to a grinding halt. Let's talk about Central Railways first. So Central Railway, there was water logging near the Bhandup region which led to multiple trains being stopped on the tracks and thousands of passengers stuck inside. This continued for over 2 hours. It was only after a couple of hours that the trains on the route were started and the traffic became smooth only towards the morning. On the other hand, Western Railway ran pretty smoothly. Talking about what happened on the roads, due to waterlogging in low-lying areas and the usual notorious areas like Hindumata, Dadar, Parel, Sion, Sakinaka, Andheri, Malad, all these areas, this waterlogging led to multiple traffic diversions, and that caused massive traffic jams on almost every road in the city. The heavy rainfall also disrupted air traffic, resulting in 14 flight diversions. In the view of the situation, a holiday has been declared for schools and colleges for today in Mumbai, Pune, Thane, Kalyan, Dombivli region. For today, IMD has issued an orange alert for Mumbai, Thane and Raigad areas. And according to their forecast, heavy to very heavy rainfall is likely to take place in Mumbai and nearby areas. And as I said, for now, the traffic situation, as far as the road traffic is concerned and the railway services are concerned, everything is running smoothly, but that was not the situation last night.
Absolutely. Thank you so much for that update there. As of now, everything is working out smoothly, but there is an alert in Mumbai. So keep an eye out on that. Orange alert is what we're watching out for. Moving on, and the Karnataka government is considering a new electric vehicle policy, and the sources tell CNBC-TV18 that the state government is considering exempting all EVs under 25 lakh rupees. The state is considering demand-side incentives and concessions as it hopes to attract 50,000 crore rupees worth of investments by 2029. The state is also considering incentives of up to 50% of the value that's of fixed assets. Companies could get 15 to 25% of capital investment subsidy and a stamp duty exemption as well. So yes, keeping an eye out on that. But on that note, we will slip into a very short break, but don't go anywhere. After the break, we'll get you the cues from commodities market. Welcome back. You're watching Power Breakfast on CNBC-TV18. And geopolitical tensions that have been continuing. Israel has widened its airstrikes in Lebanon against Iranian-backed Hezbollah militants. Israel's army chief told the troops that the airstrikes in Lebanon would continue in order to destroy Hezbollah's infrastructure and to prepare the way for a possible ground operation by Israel forces. World leaders lined up at the United Nations to call on Israel to refrain from the full-scale war in Lebanon, with the organization's chief warning that the situation was on the brink. High-level diplomats were pushing to stop the fighting in both Gaza and Lebanon. That's the update on the geopolitical front. But a quick roundup in terms of what's happening on the commodity front. We're seeing Brent crude oil holding to that $73 per barrel mark as of now. Slight bit of an uptick that we're seeing from yesterday's fall. While in terms of gold prices, they have retreated from those all-time high levels, and gold is holding on to the level of $2,683 an ounce mark. So that's in the world of commodities. But on that note, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Don't go anywhere. Bazaar Morning Call comes up next.